Okay. All right, so this is our projected income statement. Tab 8, now, again, what we'd like, 1 year isn't enough. We want to look forward 3 years. So tab 8, we add additional information for years 2 and 3. Now we're looking forward to year 2, year 3. We're putting in the revenue information, the expense information, which then creates on tab 9 a 3-year projected income statement. And notice for the 3-year projected income statement, all we're looking at is the cumulative 12-month numbers. We're not looking at month by month by month. We're looking at year by year by year. 3-year projected income statement. Most banks, most investors, when they're looking at your numbers, are going to want to see a minimum of a 3-year budget. Where do you see yourself in 3 years in terms of your financials? And again, you can do the same what if analysis that I described to you earlier. When you look at this, if you don't like what you see, you can say, okay, what if we increase sales more the second year? What if we reduced our expenses year 2 and year 3? What would that look like? Well, we go back to the appropriate page, make the change, come back and see what the effect of that change is on this 3-year income statement. And then the last tab is a beginning balance sheet, because we not only want to look at a projected income statement, but we also want to see a projected balance sheet. So we plug in what the beginning information is from our previous balance sheet: assets, liabilities, net worth. And then based on that information, we also plug in what's referred to as our working capital, our receivables, payables, inventory, over the course of the 12 months, how fast we're going to collect our receivables, how slow we're going to pay our vendors, how much inventory do we need to keep. And then based on that information, tab 12, we get a projected balance sheet. And if this is my company and I'm looking at this projected balance sheet, I'm particularly interested in the first line item, which is cash. How much cash are we going to have at the beginning of each month? How much are we projecting to have at the beginning of each month? How much our receivables are going to be? Total assets, liabilities, so on. And again, if we don't like what we see here, we go back and make whatever changes would seem appropriate. So I might look at this and say, wow, end of January, we're going to have negative cash. We can't have negative cash. How do we eliminate negative cash? What would we have to do to make sure we have positive cash? And then finally, our final tab, tab 13, is our projected cash flow statement. Remember, we talked about last week the importance of not only looking at the income statement, but also looking at cash. So the line item that gets my attention, 2 line items that get my attention on this are the next to last and the last line items. Next to last is total cash flow for each month. So we see in January, we're going to have negative cash flow of $14,531. Oh, that's not good. Then we get positive cash, negative cash, positive cash, positive cash. And then the last line item, the ending cash, is telling me at the end of each month, again, what our cash balance will be in our corporate checking account. And what sticks out to me are the red numbers. Red numbers mean we're in the hole, we're negative. I would rather address this now before it happens than try to address it as it's happening. And that's the value of doing these projections, to be able to plan for these numbers. Okay. So some final thoughts: educate yourself on the financials. This is an area where the consultants at the SBDC can be extremely helpful in not only helping you create your budget, but then working through your budget over the course of the year. Okay. Any other questions on creating the budget? It looks like a lot of work, doesn't it? It is. The first one is the hardest one. If you've ever done budgeting, the first budget by far is the toughest one, particularly for a new business or a newer business. It gets easier each year as you get more comfortable with your numbers and with planning. And again, I can't emphasize enough to you the importance of doing financial planning, as we saw with the example I shared with you in the beginning.
Tim, would this is Luis, would this be on a cash basis or on an accrual basis? What basis would you use as your historical to
Accrual
get to these
basis.
numbers?
That's a very good question, and I'd use accrual basis.
Okay.
Yeah. Because again, you're getting a much finer, realistic picture using the accrual versus the cash.